Hello traders, The title of the video is Markets Coming to You Explained. All right, when I start trading first, all right, professional traders always says that one must allow the market to come to oneself. I hear people saying that I always allow the market to come to me first. All right. I do not rush into the trade. I don't take the trade. I don't enter the trade very fast. It is better to wait for the market to come to you. But in order to avoid looking like a stupid or a new trader, I never ask to know what is the real meaning of markets coming to you. All right. But over the year, I find out that it's a very, very important issue, allowing the market to come to you. All right. So, what have I been saying to traders is this. All right. So, we always talk about trading like a pro, all right, using top down trading method, the setup, the signal, and the entry point. So, some traders get upset with me. They say, George, you're talking about it too much, all right. But the problem that we are facing talking about markets coming to you usually happen, all right, either when we are looking for the setup or the signal on the entry point. All right. So what do I mean? What do we mean by market coming to you? So you have a setup that you are trading, all right? You are expecting the price to behave in a certain way, all right? Or you want to buy. Suppose you were here, all right? Suppose you were here, all right? So suppose you were here. This is one nice example. Okay, you were here. Or you see this double bottom chart pattern, all right? So you say, all right, George always talk about double bottom chart pattern. Mark the crosses above a signal line, high probability training setup, all right? At a key level. So you see, all right, there was a support here, there was a support here, there's a support here. And you on the monthly chart, you see this candlestick bar went up, okay? Now you want to buy, okay? So you see those are two candlestick bar there. You expecting the price to go up, all right? But in your mind, you say to yourself that it will be better to buy probably near this support level, this one that was here. So you want a pullback. All right. That was your expectation. So in your mind, you say that, okay, the way those two candles buy went up, I wasn't there. I would prefer to buy when he pulled back here. Okay? That was your intention. That's why you want to happen. So before you may start thinking of buying. Yes or no? As you can see here, price now the price here. Suppose the price came here. So you are watching the market. That month it didn't reach that level. So you pull back a bit, couldn't reach that level that you were expecting it to come to. This is where you want to buy. You want to buy somewhere here. All right, you say it's better for it to pull, but I don't want to buy in the vol. You want to buy at this support level because I miss this opportunity. It will be nicer for it to pull back here. Okay. So you see, come like this, you were not there, you miss it, and now you see during this kind of bar, it start going up. You get tired of it. You get tired of waiting. So you say, all right, forget it. I will join them now. Okay? But probably you bought it somewhere at the top there. Okay. And the next thing, the price start going down. Okay. But remember, your original intention was that it would be better for it to pull back here. This is what they meant by market coming to you, meaning that you will stick to your expectation, you will stick to your plan, which means I will not enter that trade at all if it doesn't set up for me nicely. This is about market coming to you. And 9 out of 10, all right, if the decision or the expectation is viable, all right, the market will fulfill your expectation. I have demonstrated that in one of my scalping trading video this week when I was trading the Dow Jones and I was expecting a double bottom chart pattern, and the market did exactly that. Okay, now this is it. So if you were here, for instance, you see that after all these two candles, blah 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 blah. Okay, finally it come to do it exactly there, and then from there, look, it just went up. So some trader may say, George, I don't see why I should watch this video in full. But think of it, all right? It's happening all the time. Either when you want it to set nicely on a certain time frame, suddenly somebody come in and change the game. This is it. They're changing the game. Or they are forcing you to do something that you don't really want to do. But there are some traders out there, they are very, very disciplined, market participants are very disciplined. They will stick to their plan and they will say, if it doesn't set, I'm not part of it. And they will wait. And those are the people that are making money in the financial market. Those are the people, they are very composed, they are very demanding, they are very selective. They just behave like, okay, I don't miss any opportunity. That's it. So this is one good example here. I have another example here I want to show you. We are looking at, okay, the South Africa rand, Japanese yen. Okay, you see here? So again, this is a one good example here. I want you to pay attention. You see this, this is a distinctive double bottom chart pattern. When you have, which have shown traders, I talk about it in that latest video at 2-4 Ilya Wave, talking about Ilya trader pushes Dow Jones on the edge. Check that video out, all right? And we see that distinctive double bottom when you have 1, 2, 3, and then it will come down again. Minimum price move is free. 1 like this, and then it will do 2, and then it will do 3. And this is a powerful setup. So now what we will say to trader here is that prior to bullish signal above 69979, that's mean buy anywhere, anyhow. Wait for a pullback on the edge. There's a signal, and then you buy. That's how you buy. So that's why we'll say to trade prior to bullish signal above 6979, 69979. South Africa around Japanese. Yeah, this is a nice swing trading setup. Talking about market coming to you, explain, all right? So in your mind, you see that this went up 1, 2, 3. A lot of traders, day traders, swing traders, position traders, they spot it, they understand this, they understand this very well. A lot of experienced traders understand it. So they say the market was this South Africa around Japanese yen was going down for years, all right? Now they see this distinctive 1, 2, 3. Now they see this one down, all right, and this they will be expecting another move up. Look, as the price is here, people will be expecting another move down. They want it to come here. So in your mind, this is what we are talking about. Okay, market coming to you. So you will make conscious decision that it will be better for me to buy somewhere in this zone of 69979. But look here, you can see that my apologies traders, the price start going up here as he pulled back a bit. This particular month here, that's the month of April 2019. It start going up. Some people start buying. This is it. Sometimes this kind of tendency bar can force one to give up on the market, which means you may rush and buy here or do something that you did not plan to do. And the market, you see, went up a bit, and then after that, it just went down. And again, the rest, it just come back exactly while you were expecting it. So the question is, after setting your goal that the market it will be better for you to buy here, did you stick to that goal? That's it. Usually, the market sometimes will be very, very nice because if you understand what is taking place and what other trader may expect, you can set a reasonable goal and the price will do it. It doesn't mean that I'll ask the price. You see this, you look at this, look at this one. Why? You see, some people decided to buy here. You see, this is it. You see, this here. So there was a support here. Some people bought it here. Again, here they bought it. So what those people are doing here, because they are buying on top of this key level here, 74128. What those traders are doing, they were trying to buy too early. You see, they were trying to push. So somebody said, look, we don't want that. Sometimes you see that. So then the following month, they just push it exactly where they want it. So they say, this is stupid. What those traders are doing, we want to hear. This is a better place to buy. So all in all, very simple. Market coming to you, explain. When you are expecting a specific setup to be in place or a specific signal to be in place, a specific scenario to take place before you enter the trend, you want to be very patient and very demanding, very selective until the market fulfill it. The good thing is that usually, if you stick to your plan and then the market bring it to you, as I explained to trader in that video that I mentioned earlier, is that most of the time you will be rewarded. Now, it doesn't mean that because the price here, you just buy straight away. You will still apply top-down trading method. All right, you still apply top-down trading. But in most cases, if you are doing this for a while and you have mastered it, you'll notice that a lot of traders are expecting similar thing. You see this one also. You see this one on the edge of. I mean, in fact, this is not a good example because we need 2 points. So this look at this one here. Look at so the price break below the median line or the P42, and then it retested there. You see that? Hmm? So this is something. So it break below it, it retested. So a lot of swing trader, position trader, they're expecting it. They say, all right, it's better if you want to sell somewhere here or look for a setup there, and then we implement a top-down trading method to sell it down here instead of here. Look, this kind of Shiba when it opened, price went down a bit. You see, but this is it. This is one example that the market came to those traders. They are happy now. They want to participate in it if there is a signal to sell. Break below retest. That was the setup. The following month, now they implement it. Look, everybody sold it big time. See, the same thing we are saying to traders. You see that 1, 2, 3, 1, 2, 3. There are buyers here now because that's where they want it now. So now a swing trader must implement a top-down trading method to trade it. Before we wrap it up, I want to show you another financial instrument, um, a Bitcoin this week. All right, let's talk a little bit about Bitcoin. All right, I want to show you something. All right, I want to show you something. Bitcoin index. All right. All right, here it is. You see here? You see this currency bar? Why? Why? So we were selling to traders a priority to bear signal above somewhere here because this, look at this one. This common central line is broken. Yes or no? Common central line is broken and the price is now retesting. This one went to retest the common central line. So we were saying to trader priority to bear signal below a key level somewhere here. Look what the price did this week. This is this week. Price was going up. How can you control that? We say to traders that if a monthly tendency bar is closed, all right, here it is. Very, very important. You draw the high at the end of every quarterly tendency bar, you do the same thing. At the end of every yearly tendency bar, you do the same thing. At the end of every monthly tendency bar, you do the same thing. You can do the same thing on the weekly chart or daily chart, but it is very important that one is doing this whenever a monthly tendency bar is closed. So here we are. So we draw the high, the low, and the median line. Okay, all right. So where people will sell if they want to sell. All right. The best place to sell probably is to sell below this low here, because it's a bearish candlestick bar. You will be to sell below, like we buy above the high. So if you want to buy, if this thing is going to be bullish, we'll buy above the median line here and also above the high. But the best place, if it close this candlestick bar is bullish and it close like this one here, you want to buy, the best place to buy is above this high. Now, if that is not happening above the high, we will prefer to buy near the median line. Now, if you want to sell and the candlestick bar is closed like this, where people want to buy, they want the price to come to a specific level, either break below the low, retest, and they want to sell it down, or to rally near the median line. What has happened this week? The price is headed near the median line. All right. So the median line is dividing the range of the candlestick bar into two: the bullish zone above and the bearish zone below. So this is what we are talking about all the time. It was there a signal this week to sell the Bitcoin? No, there was no signal. In fact, if I show you now, this is not to criticize traders, but to point out, because we have to review losing trade. It's very important. All right. So after the emotion and everything that we go through, or the losing trade is very, very important. So I talk about a lot of trading strategy. People wonder, Joe, where you learn all this? Is after losing trade, That's how I find out. So it's not because of the losing trade itself. It's about after reviewing the losing trade. What has happened? Why this was a losing trade? Why I keep losing? Why I do not understand? This is why how I discovered all this. This is why I keep saying all the time to traders that if one is violating the market pattern, all right, hey, it's completely wrong. I say to traders that the market pattern will determine the appropriate strategies that they must deploy. People wonder where I get that from. It's just after losing and losing. You see, so I don't have enough data here for the hourly time frame for the this is the daily chart, by the way, blah blah blah. And okay, we go on the weekly chart. This is it. All right, this is the weekly. So this is this week here. So on the weekly chart, see, came down from a low here, went down, and now you form this low here, and people were buying because of the support here above that level. If I had, repeat, if I had enough data, and we go, for instance, on the hourly time frame, all right, you will see that hourly time frame, you see that this candlestick bar will be in a rising channel. This is it. So somebody that is trading from the monthly chart must enter the trade on the hourly time frame. Normally, talking about different time frame trading method, unless the person does not want to enter the trade on the hourly time frame. And if one sell today, this week, Bitcoin, the mistake that was made is because that person has violated the market pattern on the hourly time frame, because the price will be in a rising channel on the hourly time frame. Again, it's bringing us back to the same thing that we said before, all right, that we are discussing now. Market coming to you, explain, all right. So monthly candlestick bar is closed. One must draw the high, the low, and the median line. There are levels that people are buying, are watching. The bullish trader want to buy above the high or a pullback near the median line. Those are the places that they are waiting for. This is about market coming to them. This, those who want to sell will like the price to go below the median line to find a resistance. That's another place to sell, or to go below the low of the previous candle and to convert it into resistance. That's where they want to sell. So when a monthly candlestick bar is closed, those are the things that people are waiting for. So there are a lot of market participants at the beginning of a new month that are sitting down waiting for the market to show them their hand or to come to them, meaning that they are demanding a scenario to take place before, all right, they may, okay, consider to sell or to buy. This is what we are discussing now. The same thing we are seeing here, uh, where we are talking about, okay, the South African rand, Japanese yen on the monthly chart. Okay, this is it. All right, people expecting, okay, a price structure. a specific scenario to take place, and they wait patiently until it happens, meaning that the market coming to them, market fulfilling the expectation before they start deploying a different time frame trading method. For some traders, all right, the mistake that they are making, I need to remind traders that this is not a criticism, or this is just to point out things that one must pay attention to. Talking about myself and everybody else, all right, that's what is going on in the financial market. That most of the time, either a trader consistently is violating the market pattern on the set time frame, or on the signal time frame, or on the entry time frame, or any time frame. Very important. Okay, or we are not. Sometimes we are not very demanding. We can be demanding. You can be demanding. You can make some opportunity with me that, all right, you're expecting to pull back all the way here, and now it start running away from you. It happens sometimes. But in my view, sometimes I think it's better to let it come to you. The reason is that if it come to you, all right, and you have a losing trend, it won't be the same feeling if, for instance, you change your mind and join them here and then you lose. Because if you lose here, you say, oh, right, that's not where I want to buy it really. And then you lose first and then you come here before going up. Then you feel really, really bad that you did not wait for it to come here. But if you were expecting it to come here before you implement your different time frame trading method, but you end up losing, it's not the same thing like if you lose here. So it's all down to the sentiment, how you feel. Okay, how are you feeling? Okay, how the trade will affect you. That's why some traders they decided to remain very patient because it messed them up before when they rush or they are forced to do something that they didn't plan. So they just make their minds up and they say, all right, I will never do that again. That's it. I will stick to my plan. And if they don't come, they don't come. That's it. Full stop. All right. And here it is again. One, two, three. One, two, three. Again. And again here. Right below. Retest. Look at that long candlestick bar. And sometimes if you wait like that, it is because if you understand how the market is functioning and slowly but gradually, and you want to combine that with which means market timing, when we are talking about a different time frame trading method, we are talking about risk control and market timing. Very important. Risk control and market timing. So those are the two things that we need to polish all the time: risk control and market timing. So when one is mastering risk control and market timing slowly but gradually, of course, all right, through the trial and tribulation, all right, you learning, you face the challenge. It's forming us, all right. The losing trade, we are learning from the losing trade as we are learning from the winning trade. And then you are controlling the risk, all right, and the market timing. Now you want to now take charge, which means demanding the market coming to you. Okay? Because you understand market timing, you can control the risk. You say, all right, it's better for them to bring it to me, to my position, then I'll take it from them. That's what you want to do because you can trade it, you can control the risk, you can time the market better. You have polished that over the year, you have gained a lot of experience. Now it's time to become very demanding instead of, for instance, being pushed around, so to speak, all right, push around because traders push other traders around. Though. They do that all the time. They'll push you around. Which sometimes you enter a trade, all right, they take you out very fast. You wonder what's going on, but your decision was not wrong. But they just push you out fast, okay? And then later on, you may have two losing trade in a row, and then that's what's going on. Another thing I want to say to trader before we wrap it up very fast is this: is that I say to traders, all right, very, very important topic. What's the day today? All right, this is another day. All right, we need to talk about this to trade me understand. I say to traders, one can stay away from the stock market or trading from the first to the eighth. Why? It's very challenging to trade during that time. Okay, usually economy news and all kind of blah 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 and the preparation for major economy news during the first week of the month can make that week very challenging. So I recommend to a lot of traders and say, okay, what's the point of trading when the market is very challenging? What are you trying to prove to somebody else? Please, you can decide to stay away from the market. Also, sometimes trader will notice, trader have been following me for some time, notice that usually trader will be asking me, Joe, do this, Joe, do that, Joe, do this. And then sometimes trader will may contact me between the first and the eighth. And I'm very reluctant sometimes to answer those requests because I know that this is not the best time to be telling trader to buy and sell. I trader wonder what's going on with George. There are we watching the time, talking about the clock, and we watching also the calendar because there are seasons, there are periods. Like you ask, all right, sailors will tell you they don't go on sea any season. The farmer will tell you the same thing. Even the bird, they don't migrate any time, all right? So this is what's going on all the time. But I'm not trying to patronize traders. You may say, George, you go on and on and on with those blah blah blah. I mean, over the year, I've seen a lot of traders, and I keep saying, repeating myself for some of the things that are important. People say that, oh, you keep talking about it. Well, some of the stuff we need to talk about them all the time in videos, like a violation of market pattern, like market timing, like a risk control, like one of the topics we are discussing today, market coming to you. Those are essential matters that we need to bang out all the time, almost in every tutorial, because talking about all the time, I'm talking about if one cannot trade like a pro, one is violating the top-down trading method. Or I would say to traders, if one is not applying top-down trading method, one is not trading. So you may listen to our video and say, this guy keeps saying this all the time. There are reasons why we keep banging on those things because we know that those are the things that when traders are neglecting those things, they can get into trouble. All right. I don't know about you because I hate it when people are losing, and I hate it when I lose also. And money is so important. And I try my best because this is one area I have neglected myself for when I started investing. I lose like a donkey, big time, big time, big time. I mean, when we are talking about losing, I mean, have you ever lost? I mean, almost, I mean, every trade almost losing, 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 losing. And you keep coming in, you keep losing. I mean, we are not talking about the amount of money, talking about the number of trades. I trade sometime throughout the night, which is crazy. That's why I say to trade it. Don't trade the Asian session at all. I've done it myself. I've done it. I sit down. I trade the New York session, or I trade the Australia, Hong Kong, and then trade all kind of Tokyo and so on. It's pointless. Have sleepless nights, and you are just tired only to lose. And you have like maybe 5 or 6 position open, and then the next thing you see, and they're all gone, and you have to find again money to put into your account. I mean, it's tiring and annoying, and I know that. So when I'm saying to trader, because a lot of new traders watch our videos, so I need to say to those traders so they don't go around emptying their saving account or doing things that few years down the line they say, what George was talking about? I lost everything. Ah, what's going on? I prefer that trader dislike my video because I keep banging on those things all the time. That's okay with me. I can handle that. Trader can hate me for that. That's fine. But the truth of the matter is that later on, trader will respect you if you tell them the truth. This is for sure because trader go through process, a learning curve. Some trader may leave the market. Even if they leave the market, they look back, they say, look, what that guy was saying was correct. What that guy was discussing was true. Instead of looking back and say, he was just telling us that you can make millions of dollars in the financial market. He was just telling us that we all become a millionaire, which is just a false hope. I rather tell traders the reality of the market and the nitty gritty that is happening and what they need to pay attention to so they don't get cooked or lose their shit. Enough of my blah blah blah. So this is about okay markets okay coming to you as planned. I hope you will find the video useful that will help you all right to have a strategy So first the plan. So there must be a plan. So everybody must have a strategy before coming to the market. But when you are coming to the market, you must have a plan. So this is it. So those who have a plan will stick to their plan. So you want to stick to your plan, it means that you want the market to come to you. That's it. If you have any question or suggestion, feel free to put in a comment section. And of course, I will be recording another video to answer your specific question. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, be sure to mark it down. If you think it's an essential tutorial, feel free to share it on the social media. Subscribe to our YouTube channel. Our YouTube channel is George Trio. Click on the notification bell so anytime we record a new video, you will be the first person to be notified. All right. Until the next time, enjoy yourself and be very happy. We are the TSTWSYS008 traders talking about markets coming to you. Explain. Is it coming to you or are you going to eat? That is the question. All right.